Hey guys, tax attorney Josh Sells here, another episode of Tax Law Guy. Hey, today we're going to talk about what can't the IRS take from you? What can't the IRS take from you? So if you're in a scenario where you owe back tax to the IRS, you may be very worried about what the IRS can do to you, or namely, what can they take from you? So today we're going to talk about the opposite of that, the things that the IRS cannot take from you. And so we're going to try to highlight a few of those on today's episode of Tax Law Guy. So let's get right into it. All right, so you owe back tax to the IRS. When you owe back tax to the IRS, you may be subject to what's called a levy. Now, a levy is nothing more than seizure action. That's where the IRS is going to take something from you in an attempt to pay down or fully pay the back tax liability. And those assets could include real estate, it could include your wages, it could include cash in the bank account, retirement accounts, vehicles, boats. The list goes on and on as far as what the IRS can take. So let's spend a few minutes today talking about what they cannot take, or I should say what they generally don't take. So your primary residence, obviously if you are being issued a seizure notice, a levy, you probably already have a tax lien filed against you. And many folks worry that the IRS is going to take their primary residence. Well, the good news is here, while the IRS certainly has the ability to, they are not in the business of throwing people out of their primary residence. They're not going to throw somebody on the street over a tax liability if the person has only one place to live. And now, nonetheless, they still can do that in situations where there is tax fraud, for example. The IRS can get a district court, a federal district court judge, to order the seizure of your primary residence. However, last year I think there was a handful of times when that happened, so it is very rare when that happens. And again, that's typically only in situations where there is extensive tax fraud involved. So your primary residence, they're not going to take that. You can pretty much take that to the bank that your home is safe. Now, if you own multiple real estate entities or parcels, I should say, you have a vacation home, a rental home, absolutely, the IRS could make a decision to seize that subsequent parcel. So that is something that they could take. What about your vehicle? If you have a vehicle that you use to get back and forth from work, the IRS isn't going to touch that. And logically, that makes sense. If you don't have a vehicle, you're not going to be able to get to work. If you can't get to work, you're not going to be able to produce income to be able to eventually pay down your tax liability. So your primary vehicle, the IRS is not interested in seizing. Certainly, they're not going to, because that would create a financial hardship for you, which we'll talk about more about what that financial hardship means in just a moment. And your retirement account, I get asked quite a bit, what about the retirement accounts? Certainly the IRS can levy a 401k or an IRA. However, they do have a policy position where they're not going to intentionally or involuntarily levy a retirement account. So that's something that is a policy decision of the IRS. So generally speaking, they're not going to touch your retirement accounts. However, your bank accounts, wages, certainly that is something that would be subject to a levy. So they can still get to those. Your Social Security is generally protected up to a certain extent. The IRS can take up to 15% of your Social Security. However, I want to talk about this concept of financial hardship now. Again, they're not going to take your primary residence. They're not going to take your primary vehicle. Those things are considered a necessity, obviously. And so what about if you are under a financial hardship? Now, the IRS defines a financial hardship as not being able to meet necessary living expenses, food, utilities, housing, medical. So they would look at your income, your gross monthly household income, and then they would subtract off allowed expenses for housing and utilities, food, clothing, and miscellaneous, healthcare premiums, out-of-pocket healthcare, transportation costs such as fuel, insurance, a vehicle loan or lease, current taxes, and there are several other categories: child support, delinquent state tax, term life insurance, for example. And they would allow you to subtract all those expenses. And if that number from your gross monthly household income minus those allowed household expenses, if that number is below or at zero, you are under a financial hardship. In that event, the IRS cannot take anything from you in terms of your bank account, in terms of your paycheck. And so once you're under a financial hardship, then the IRS technically can't take anything from you except for your refund at the end of the year, or even offset the state refund. So that situation where you are under a financial hardship is actually known as being placed into a currently not collectible status with the IRS. So if you are down and out right now, where those expenses exceed your income, then technically the IRS really can't take anything from you, including your Social Security, including your wages, including the funds in your bank account. So the things the IRS cannot take from you: your house, your car, and if you're under a financial hardship, pretty much anything. And so if you owe back tax to the IRS, it's worth considering whether you are under a financial hardship to have your IRS account put into a currently not collectible status so that they will not garnish your wages or levy any of your assets. So the IRS has a lot of power. There's a lot of things that they can garnish, that they can levy. But if you take action, if you're proactive, you can certainly hedge off a lot of those issues. So hopefully that was helpful, talking about things that the IRS cannot take when you owe back tax. If you have any questions, or if you want to see if you're under a financial hardship as well, put some comments in the put a reply in the comments section below, or drop us an email or a phone call. We would certainly love to help you. Again, definitely look at that financial hardship. That's a great opportunity to actually shut down the collections arm of the IRS. All right, hopefully that was helpful. Thanks for watching, and we'll see you on the next episode of Tax Law Guy.